But the big talking point on the street this weekend and this morning will remain the approval of amalgamation of Gujarat Gas, Gujarat State Petronet, which has announced a new scheme of arrangement. This will help the government of Gujarat consolidate its assets in the energy business through various companies. Well, this will result in two entities post the transaction, and Mika standing by with more on this. Mika, good morning. You've done considerable amount of work on what this scheme of amalgamation is going to mean for companies. Markets potentially had a whiff of this because GSPL was up 25% in the last 5 days, while Gujarat Gas has been on the sell side since its earnings. Now, that could be attributed to it being a very expensive company, the fact that Morbi still is going to show a decline in PNG volumes in September. But all that aside, what do you have for us? What does this mean for both all companies included and then shareholders, of course?
Good morning. I'll start with what the scheme is. We can break it up into two. In the first part, three companies, Gujarat State Petroleum Corporation, Gujarat State Petronet and GSP Energy will merge into Gujarat Gas. Now, after this, the transmission business will be carved out separately and a new company named GSPL Transmission will be listed separately. So at the end, Gujarat Gas will carry out businesses of city gas distribution, gas trading, exploration and production, while the transmission business will be, working separately. In terms of swap ratios, well, for the Gujarat State Petroleum Corporation merger into Gujarat Gas, 10 shares of Gujarat Gas will be issued for every 305 shares held. For Gujarat State Petronet, 10 shares of Gujarat Gas will be issued for every 13 shares held in GSPL. For GSPL Energy, no issuance of shares since it's a wholly subsidiary. And when the GSPL transmission businesses, demerge, it will issue 1 share of the company for every 3 shares held in Gujarat Gas. Now, this will lead to a total issuance of 78.66 crore shares on behalf of Gujarat Gas. But most of these do get extinguished because all these companies have various stakeholdings in each other. And lastly, in terms of timeline, well, the company expects SEBI approval by December of 2024, and the entire scheme of arrangement will be completed by July to August of 2025.
Mika, what do brokerages make of this and what do valuations suggest? I mean, I just want to understand who is going to win and who is not, because from the look of it, GSPL shareholders, at least in terms of stock performance, are gaining for now.
Yes. When you talk about valuations, now the deal does seem very fairly valued. Now, in terms of Gujarat State Petronet, the entire company is valued around 26,000 crores, but the core business is valued around only 3,500 to 4,000 crores. And the company's investments are where the majority of the valuations come in, 24,000 to 25,000 crores. But for Gujarat State Petroleum, it's valued around 21,000 crores. The gas trading and E&P business is valued around 11,400 crores. And the implied EV to EBITDA multiple for the core business is around 7 times, which is in line with industry standards. When you talk about Jefferies, mixed views. Jefferies maintains an underperforming rating on Gujarat Gas. They do say that, the merger will improve Gujarat Gas's margin profile, but it also increases the earnings volatility. And post the merger, Gujarat Gas can have a fair value of 513 rupees, which is around 15% downside to the current market price. And lastly, we have MK. They've also have maintain a reduced rating on the stock at a 600 target. That's a flat upside or downside. The valuation, and they expect the merger to imply 50% EPS accretion for Gujarat Gas.
All right, thank you for that very, very detailed look at what's happening with Gujarat Gas, Mihika. And, it's a mixed view from brokerages, to be honest. Not everyone is so gung-ho on the Gujarat Gas sort of split up or reworking of their scheme of arrangement. But let's also hear what the management is saying.
The management business growth projections for GGL estimate it to become one of the India's largest integrated player with presence of gas trading and city gas distribution business. GGL will be able to better leverage the combined assets and expanded capital base all put together. It will enhance its profitability and return ratios on account of various gas sourcing portfolios which the GSPC is bringing along with it. The cash flow generated by the combined businesses can be deployed more efficiently in future to fund organic and inorganic opportunities which are going to rise in the expanding energy market. It shall become the only CGD company having access and also in-house expertise to various sourcing portfolio directly from domestic as well as international market. It also has regasification capacity tied up, resulting better business synergy. The combined entity will benefit from a stronger market presence, enable better pricing power, and the ability to capture a larger share of the growing demand for natural gas. I would summarize that the ultimate objective of the scheme of arrangement is to simplify the layered group structure. Second, merge various interlinked businesses into one entity. We are also looking towards eliminating related party transactions. The scheme of arrangement will also unlock value for our shareholders.
Okay, so Gujarat Gas definitely on the watch list.